Hi and welcome to the Trading Bell. How have the markets been doing? I'm speaking today to the CEO of ICEA, Lion Asset Management, and we want to understand how they have been really doing. He's the chief executive when it comes to matters asset management. So when it comes to investing people's money, investors' money, how are they faring on? They've been here for more than 3 decades, and so they have seen it all, and probably more that is coming in the evolving landscape. Welcome to the Trading Bell, brought to you by Safaricom Business. Einstein, welcome to the show.
Thank you very much.
It's been about 2 years since we last spoke, and I'm sure many things have happened. But 3 decades in the market, you're about to celebrate 40, right?
Yes.
How soon is this?
Yeah, so we'll be having that will be happening in December.
In December, okay.
Yeah, so we've been around for 40 years.
Wow.
Yes.
Thanks enough. I mean, I'm sure that's enough time for you to have seen it all. Yes. But we can't forgo the fact that the markets keep changing. The investment landscape keeps changing. I wanted to ask you, from your own perspective, when you look at it right now, what has the market been like, and how has Kenya's market investment landscape evolved over time?
I think I can go back to when I started off as an analyst, probably 25 years ago, because I think at the time there was a lot of, in terms of structures for the market, in terms of investment. I think the first that comes to mind is the fact that if I look at the equity market, for instance, we did not have automated trading at the time.
You're right.
I recall we had, in terms of settlement processes for trading in shares, there were very manual processes. And that is when, for instance, if you're an investor in the stock exchange, you had share certificates, hard copy share certificates to reflect that you're the owner of shares in a company, the stock exchange. And we have seen the transition, first of all, in terms of processes, from manual processes to automated processes to electronic trading. We've seen the evolvement in terms of investment opportunities. I think it is within that period of time that we also saw the evolution of the government issuance of securities, moving from treasury bills to treasury bonds, seeing the increase in terms of the tenor. Probably 15 years ago, we saw the first infrastructure bonds coming into the market.
True that.
Now they are a very popular instrument in terms of investment. We've also seen I think that during that period of time was also the time when we came in, when the RBA, Retirement Benefits Authority, came in and was set up. And we've seen, again, the evolution in terms of the the regulations governing retirement benefits. And we've seen that increased participation in terms of the formal participation and involvement of pension schemes in terms of investments, especially in terms of diversification. Because with the regulations, we then came up with the famous Table G, which governs the investment, sets up the investment guidelines for investment by pension schemes, so they could now invest in other assets. If you recall, historically, a lot of pension funds invested primarily in property. And with the RBA regulations, it means now they could invest in more a range of assets beyond property. We've seen investments in offshore. I think we've also seen private equity investments come into the market and more participation by pension schemes in the same. I think that is as far as the institutional side of the investment is concerned. But at the retail side, we've seen the evolution of probably about 20 years ago, the CIS regulations that came into the market. And we've gradually seen the growth and participation by retail investors in the unit trusts. So a lot has happened over that period of time. And I think what is important is that there's a lot more, there are a lot more investment opportunities available to both institutional and individual investors. And there's more variety. And I think that gives the freedom of choice for investors to invest in the instruments that suit their investment objectives.
All right. Yes. Thank you for that color. And I think it paints a big picture of what's happening really from those hard copy days to now and what we're doing on the phones. Let me ask you, from your perspective, in terms of financial literacy and appetite and the uptake as well of these products, knowing very well you also in the field with quite a number of products for customers, have you seen an increase from especially retail investors?
Yes, certainly. Certainly, we've seen a lot of increase in retail investors. We've seen, I can give you practical examples. When we started our annual general meetings for our unit trusts, we would probably hold them in a small room, and we'll probably have not more than 20 investors coming to participate in our unit trusts. I know that in between, since then, we started gradually seeing a lot more participation at the annual general meetings. There was a break during COVID when we had to do them virtually. But when we started getting them holding them physically, we have seen as having to use much bigger rooms to host our unit trust investors for our annual general meetings, and even the forums that we hold with them. A lot more engagement in terms of questions. People wanting to understand a lot more about how their investments are performing. Questions about customer service, how we can enhance the experience in terms of digital platforms. So certainly there's a lot more. We have seen and therefore seen the need to also invest a lot more in terms of being able to provide our clients with the best client service platforms, whether it is digital, and so there's a lot more engagement.
Excellent. Yes. That means there's more knowledge going out there.
Yes.
So let me ask you, from your perspective, because you have been seeing, for example, and I want to retouch on the money market funds, because you also invested there, I think under your unit trust as well.
Yes.
But what we have seen is that there's been a challenging time, especially when it comes to interest rates. We have seen them come down, especially for the fixed incomes, amidst sometimes inflation, which probably the last few months has now a bit stabilized on that, but interests have really gone down on that. Currency, we could say not much because of what the government has done. But I'm keen on the interest rates going down, knowing very well that there was heavy investment, not just by you, but by many others as well. What are you doing about this whole thing, and how are you facing this? How are you navigating this?
Okay, I think it's important to, as even as we talk about interest rates, to just step back a bit and ask ourselves, what accounted for that situation, high interest rate environment? I think the high interest environment was driven by factors, including, you remember that there was a lot of concern about the risk in terms of the interest rate, about the foreign exchange, foreign denominated exposure, and the concerns about the maturities that were coming up in June. And I think we saw currency war, concerns about the currency, and also heavy government borrowing, and a lot of investor concerns about the government at the time. And that, I think, was the reason why we saw interest rates increase and the currency fluctuating. Actually, initially weakening until last year. And you see, once those fundamental issues were addressed, with, first of all, the central bank rate progressively declining. At some point, I remember it was at 13%. I think now it's at 9.25%. And of course, the interest rates and therefore had to match and reflect that decline in terms of the central bank rate. That period of high interest rates was also the time when there was a lot of activity in terms of money market returns, because those are very attractive, and I think there was a lot of interest. Now, with the subsequent decline in interest rates, that has meant that the attractiveness is no longer as significant, and therefore, what we have had to do is what one must do is, one, focus in terms of providing opportunities for investments, for investors. And so what we've also done as ourselves, for instance, I think we talked about, we have a multi-strategy bond fund, which offers liquidity and competitive returns. And so we have had to look at the kind of products that we can offer that still offer that sense of security, but as well also provide competitive returns to investors.
Okay.
So in a nutshell, what we've had to do is to really be innovative and come up with products that will still meet the investment requirements and objectives of the clients that we serve, but also bearing in mind, of course, risk. But we are also, I mean, you've alluded to the questions about engagement with clients. We've also been involved in a lot of investor education. So that we are constantly informing our clients about the investment environment and explaining to them why we are seeing the level of interest rates as they are, so that they understand and have a fundamental appreciation of the dynamics that are behind the movement in interest rates. And with us journeying together with our clients, that helps them appreciate what is happening, so that they have a full understanding of the underlying dynamics that are driving the investment environment.
This conversation is brought to you by Safaricom Business.
You're watching Trading